Hello and welcome to the Weekend Investing Daily Bytes. Today is 26th of April. Uh, Markets have been very resilient in the wake of poor overseas cues. So that is really good news that overseas cues were negative, yet our market remained reasonably robust and looks forward to going up, I think. So the setup in the last few days, as I see it, so we were, uh, gaining ground from 16,800. We went to 17,800 very quickly. This is the Nifty chart, and there was a very sharp correction on the 17th. It did simmer around for a couple of days, and on Friday there was a sort of a trap that was laid where this support got broken, and a lot of people were caught on the wrong foot on the short side here. And from there, it has very quickly recovered in two sessions back to the highs of the previous move, closing this gap as well. So now we are set up, with this 17,840 odd high. If we decisively take this off, then we are going to get into a new leg that goes up and possibly to all-time highs. So this is a very exciting setup now for the market, for Nifty especially. The breadth of the Nifty was still, I would think, sort of normal and average, not very convincing that we will go through all the way, but for the day, reasonably well done with FMCG doing well, Nestle, Tata Consumers, levers pulling up the market, banking remaining sort of muted, IT was muted, I think, except for NTPC, Bajaj Auto, or Adani Ports, Hindalco, and some softness in Kotak and Reliance. I think most other stock on the Nifty did was either flat or slightly up. So real estate again continued to rally hard, 1.4% on real estates. For the month, we are up 14.5%. The top sector for the last 1 month has been real estate, followed by PSU banks at 13.8% and banking at 8.7%. So one sort of uh, idea that one can deduce from here is that this auto selection of sectors, which sectors are doing well, that is very important, and that is done by momentum investing by its own as the sectors rotate. So you don't have to worry about which sectors are going out of flavor, because uh, that is the key differentiator between underperforming portfolios, where the switch to the new performing sectors is missed, and you don't get out of underperforming sectors at some reasonable time also. So this is what was happening. Metals, commodities, and energy slightly soft, but not too much. And FMCG and real estate top gainers for the day. Mid cap index also, if you see this larger picture, had broken down from this support and has very quickly come back and covered this entire channel. So it's kind of simmering around uh, this resistance, and once it breaks out, I think very easily it will go towards 32,000. So good chart on mid caps. Small caps also have recovered very well, above the 200 DMA now, very near their resistance, good resistance at 9250. If it just breaks out, I think 9500, 9600, even 9800 should come quickly if we get more legs on this rally, and it does look like a strong up move here. Banking index has been very strong. We can see that this resistance was broken out, then it came back and retested this resistance, and now it is going up again. 43,100, 43,600 are the next sort of lines of resistance for Bank Nifty, but all-time high is not too far. A few more good results in banking and finance, and we should be there. Stock of the day, Mahindra CIE. Uh, Extremely good volumes. good results. I think it has broken out of this sort of lethargic consolidation here. And although I would have rather liked it to close more towards the highs of the day, but we can watch it for a few days. And if it does takes out this today's high, I think then we will likely go much higher on this. So it's a good stock for watching on and keeping in your watch list. KPIT Tech is another stock that I wanted to point out. So KPIT Tech was doing really well since June of last year, and from around 450 levels, it went to almost 950, and then it corrected down to 735, and almost everybody wrote this stock off just 20 days back that KPIT is done and it finished. And when you actually look at it, it just clipped its long term or medium term trend line only. So nothing really had gone bad in this stock, but it only came down, corrected, took support again, and is building up again. So I it does seem like it wants to go much higher, and there seems to be no concern as of now in this stock. The only index of concern for me is Nifty Next 50. This has been a laggard. It is much lower from its all-time high than other indices, and it does seem like that it is at that crucial point where it now starts to outperform, and above 38,900 odd. I think we should see some fireworks on Nifty Next 50. So the discussion topic for the day is think again before buying a falling stock. You would have always heard, don't pick or don't try to catch falling knives, and this is somewhat a similar theme. Now, if you think about the Thanksgiving festival, mostly in the Western world, uh, the turkey which is sacrificed on that day in most families is fed well for 2 3 years, on an average about 1,000 days in the life of a turkey, where it is being fed well, and the turkey is happy, and everything is gung ho. But suddenly then there's a surprise on the 1,001 day, and you know the well-being goes to zero, so as to say. So this is something of a black swan or black turkey event, if you may call it, uh, that can happen, and it can happen to anybody, anytime, any place, any product. This is the nature of the markets also. What we have seen exactly play out has been in the First Republic Bank in the US. Yesterday, First Republic Bank dropped further to close at $8. It was $220 just a year back, and now it is $8, and it was a well-functioning bank at one point of time. Over the last 10 years, prior to this fall, it had gained almost 10x, going from $20 to $220. Very nice, nothing wrong with that. Uh, Imagine you were invested in this all this while for a decade. You were really having a fun time seeing your investment go up. However, something changed. Stock started to come down. You were still convinced that it'll, maybe take support here. Maybe, things will turn around. 220 to 120, 120 to 20, and then 20 to $8 so far. And I don't know how far it goes down. So currently at $8, 96% drop from a high in just over a year, and this is a bank. It is not even a very high tech, some biotech firm which has that kind of a risk on this. So common mistake people make is that they start buying, assuming that the stock has become cheaper and will go up. So 20% stock has dropped, people will start buying, people will start averaging, so on and so forth. So if we just do a piecewise uh, discussion on this stock. So when it fell from 220 to 120, a drop of about 45%, it would have seemed very attractive that if you were stuck somewhere here or even here, that the stock has retraced back, nothing wrong in the fundamentals one can see, and hence one should buy here, somewhere around $120. So A stock that is down 90% actually falls 80% first and then halves from there. This is something that we don't realize when we look at stock. So if a starting price of a stock is $100 and it falls by 80%, we are down to $20. And then it halves from there and we reach, $10. So overall, the 90% fall comes in, if you want to put it in two steps here, it'll drop by 80% first and then it'll half. A lot of people will say, the stock has dropped 80% or 60%. How far can it go down? Let's buy it. But the next step could be a 50% cut on the capital that you're putting in. A stock that is down 99% has halved 7 times since its peak. So 100 going to 50, 50 going to 25, 25 going to 12.5, so on and so forth, and comes down to 80 cents on this. So 99% loss in the value of a stock requires to go 7 times down. So you'd say, how should I save myself from such a stock or such a situation? And the only sort of solution that is there, which is there also in momentum strategies, is to have an exit plan. That you should have a clear exit plan how you're going to exit a stock. It should not be based on what your friend is going to tell you, or how later post event you may find out that, oh, the fundamentals have changed, so on and so forth. So whatever may be the exit plan, I'm not saying there is one exit plan, but there are so many ways of having some exit plan, at least combined with maybe your assessment of the situation. So in this case, for instance, a 200 DMA breakdown after the stock rallied could have been, one point where you may have exited with a 12% loss, or you may have had some super trend based exit, some average to range exit. Maybe you would have exited here somewhere with a 22% loss. Maybe you could have had a exit plan that if it falls 25% from the top, I'll get out of it. We would have exited at 25% loss. So not just the loss in, so what happens is when we experience all these losses, we not only have that loss, of course that is a loss to us, but we lose confidence with each such damage to the portfolio, and we lose opportunity cost of our capital. Very, very important. I keep repeating these points, but these points need to be hammered very well into the investor's head, because this really helps the portfolio. So if you are, let's say, just go through a journey, let's say we bought here, and this example of Yes Bank, similar Turkey example, or more or less here, we bought here at 100 rupees in April 14, and we are in August 18. Returns are almost 300%. We are really happy. It's become a massive multi-bagger. Stock drops, to 320. Returns are 220%. Still, you want to average more. You think it will come back up strong. Another few months down, stock is at 180. Your returns is still at 80%, and you want to still wait. Or we want it to recover. There are some good stories of restructuring that are happening. Another 4 months down, stock is at 15 rupees. Returns are at 85% over the last 7 years, and you're angry, desperate, and continue to remain hopeful about it. What has all this done? It has created a very huge negative energy in your portfolio. It has created loss, first of all, created huge negative energy. You've lost your confidence a bit, and it has resulted in a huge opportunity cost loss. That money at any point of exit where you would have exited out could have been used uh, anywhere else. So having an exit plan is extra ultra crucial if you want to be successful as an investor. All large investors, even buy and hold investors, have some plan in mind where they will jump the ship. This buy and hold and sleep forever and I will never sell my stock, this is all fairy tales. Please don't fall into that trap. You need to stay alert, because there is no free lunch like buy and sleep and you will make money. So four things that you should always know: what to buy, when to buy, how much to buy, and when to sell. These are the four critical questions that we use in momentum investing strategies as sort of the critical questions that need to be answered at any point of time. So there has to be crystal clear clarity any day what is my exit point, what am I getting offered as an opportunity cost, opportunity for re-entry into other stocks, what is that cohort, which stocks are looking good, what is my filtered list of new stocks if I were to get out of other stocks. Everything has to be planned and be ready to be executed. Only then this kind of a military like execution that is possible. So thank you so much for watching this episode, and we'll meet in the next one. Thanks. Bye.